Hello, traders, and happy Friday. It is 8:03 a.m. Chicago time on Friday, the 31st of July, the last day of the month. Welcome into the broadcast. This is episode number 1809. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you can hear me nice and clear. I'm not blowing out your speakers or otherwise. This morning, excuse me. This morning, the Russell is the laggard, down 8.4 points or 0.56% as the small caps are a little bit are dragging behind a little bit. The S&P and others have held on to the gains made yesterday. Gold is the leader. Gold approaching $2,000 an ounce in the December 2020 contract. We rolled to December yesterday. Trading at 19.90 and 20 cents, up $23.40. Holy cow, gold's getting expensive. All those weddings are going to be very, very expensive this fall and next spring. 1.17% up. The Nasdaq, of course, holding tight to its gains from the Fangman stocks, up 101 or 102 points or 0.95%. Crude oil in the September contract trading at $40.25, up 33 cents from yesterday's settlement. The market position, the market posture, allocation to risk is allocating to risk this morning. And except for the Russell, which is a bit of an outlier today, it looks like the market is hanging on to those gains. It's really interesting that as expected, the S&P is floating around that 3265 area, which if you recall from last week, and I can pull up the videos and the pre-market videos of me talking about this, that if we push through that 46, and stay bid, we are likely to push into the 65, around the 65 area imbalance there. We did have a double top at 71.75 2 days last week, had the same high, a week high, which we took out in the overnight session. The overnight session, the S&P went to 73.75. So I'll get into that analysis. I'm getting ahead of myself. But there's a segment that I really like, which we do every month, once a month. And it's this. You guys just beat me to it this morning. I came in here as I prepared this image, because instead of asking for it, I just wanted to put something up graphically so you can type your location in. I came in and everybody's just mentioning where they're from. I guess everybody's anticipating this last Friday of the month being the day I ask about where you are. So here's what I'd like you to do. A little bit of fun, but also really cool to kind of look around, and find people. Here's the thing. YouTube and also I will block any phone numbers, any email addresses, and information like that from being shown. Why? Because the transcript of the chat is kept with the video, and you're just going to get spammed to pieces. So we don't allow your private information to be shown here. It is blocked. What you can do is you can post a link to your Twitter if you have one, or something, or Instagram or something like that. If you want to be contacted, at least that way you can control what comes in. I see a lot of people in the same or similar locations. And my goal with this particular slide, I'm spending way too much time on this, by the way, this morning. My goal with doing this once a month is for people to realize how close they are to another trader and to connect. If you want to connect with someone and you cannot connect with them here, I'm more than happy to make the best effort I can to have you send a message to go to futurestrader71.com/contact, drop your info. So if you see someone nearby and you want to get in contact, just drop me a note with that person's name, and we'll try to connect you guys as best as we can. Anyway, take a moment, type in your city, state, province, whatever fits, and country, and look around, look at the list of people typing in here, and that way you can find out who's close by. See a couple people in Amsterdam, a couple people in Ecuador. You're actually close to Mike, Big Mike from Futures.io in Ecuador. You might want to drop him a note on his board, Futures.io, and so on. Maybe we'll create a solution for this and have a better venue of connecting all of you traders together. This is what I'm all about: impact, long-term impact to traders, connecting traders, creating community. That's what EdgeClear and Convergent are all about. Anyway, moving on. What do we have for today? We had a bunch of numbers. Consumer confidence out of Japan came in strong. GDP growth rate in France came in stronger than expected, but still down. They came in at negative 13.8 versus negative 16.2 expected. GDP in the Eurozone year on year, negative 15% expected, negative 14.7 in line. Personal spending was higher in the US, but personal income was lower. It was expected at negative 0.3, came in at negative 1.1. And then this morning, we have Chicago PMI, which comes out at 842 to subscribers, or 942 to subscribers, and 945 for the rest of us. For the rest of us peons who can't afford to pay whatever they charge every year for that number, it's the PMI is expected at 42, and then at 10 o'clock we get the Michigan Sentiment Final. This does not generally have as big an impact as the prelim, but still we'll be paying attention. So anyway, after the open, be careful. 12 minutes into the open, we got Chicago PMI, which can be a mover. And then a half hour after the open, we get Michigan Sentiment. And then that wraps up the week. Okay, the big earnings, since we are in the depth of earnings season, of which yesterday was the most important. You could see that the market responded a lot to yesterday's earnings. Why do I feel like I'm talking about 300 miles an hour? The big earnings this morning are already out. All of the big numbers are already out. There's nothing expected that has an estimated revenue of 3 billion or higher, so I don't pay attention to anything else. So that's where we are. Let's take a look at what was expected yesterday versus what we got. Again, take a moment to type in your city, state / province, and country for everyone to see. Appreciate you doing that. So this mess of a map here, usually they're neater or cleaner. I decided to punch in, highlight the key figures that we are to look out for in terms of a map of prices. In terms of prices that we need to watch out for. But yesterday played the secondary scenario, the one that's shown in this kind of dark pink or whatever this color is, a push down and then a pop higher, an impulse higher, and then a slow drift or a push back up into and above that 46 area. Of course, there was a lot of help. There's a lot of help here with the earnings, but that's the scenario that pushed through. And again, yesterday's key numbers, we know about the 28. I didn't put the 28 in here. We were in that vicinity opening already, but 28, 29 has been key for about a week now. We know about 39, 47. A push through 47. We're looking for 57 and 65 being the key kind of the key bus stop for this run up on the top side. On the downside, 32.08, 05, 95, and 190. And here we are in the session at that point. We had put in a low, an overnight low of 32.10. Remember this 95 right here? Well, here's what happened in the day session. I'm going to keep this chart nice and simple, but here's what's happened in the day session. This is the 4-tick Renko. There it is, the 95, boom, ba-boom, right? 95, pushes up to 29. There's the 29 right there. Pulls back to the IB high, the first hour's high, which was at 23.50. And then the next stop is what? What was that price? 39. So here's the map again. Here's the map again. 39. Remember the 28. This is that cluster right there. 95. Okay. 39, 28, 95. That's what was expected. And 95, 28 cluster, and 39 cluster. Next cluster up is expected to be 46. It didn't quite get here. It tried very hard, didn't quite get there, and then on the close, it ran it right up to 52, and I was looking for 57. So it didn't hit that, and then later in the session, of course, with the announcement from Apple, we pushed all the way up to the 71.75, which is a double top right here in the stock zone. We pushed right into it and then fizzled out at 73.75 and have been sitting sideways ever since. I want to remind you the shaded area, this is just my charts getting reconfigured, redone, spring cleaning, as I've talked about for the last week, cleaning up my charts, minimizing what's on them. The shaded area is RTH. The beautiful blue, I love this blue profile, which is the same blue as the time and sales, the buying side on the time and sales. The blue profile is for the RTH session. The orange profile to the left is the full session. It's pretty interesting how much more volume there is in the day session than the overnight. And so far, the extended hours have been balanced. We have 324,000 contracts, a lot of that traded right at the reopen. And we've been sideways for most of the session. We have a very, very clear balance point here on top of what was that price again? 57. The 57 right here happens to be the point of control for the overnight session. My emphasis is not to tell you that I am right or I'm guessing right. My emphasis here is to show you without a doubt, hopefully, again, futures are not for everyone. My emphasis is to show you that there is some organization to the chaos. Okay, there's randomness. There's definitely a huge element of luck to the market, and there's randomness in the market. But the structure and the rotations, the auction, all those fancy words that I use and others use, there's some structure and some behavior, somewhat predictive behavior or predictable behavior of the markets. And that's what I am talking about. And so that's where we stand. We have the mid and the full session VWAP, full session mid and VWAP on top of each other, on top of the point of control. We're coming into today with what looks like a market that is somewhat sleepy, somewhat restful, somewhat exhausted maybe. This is the 30-minute chart. Let's back up. Again, the shaded areas are RTH, and the orange profiles expand the whole Globex session, including RTH. And let's take a look on this 30-minute chart at what we've done. So what we've done is we've pushed to this upper distribution. That's where the 65 comes from. It's the high volume node of the upper distribution. We've pushed through this 39 area, which is the low volume node, right? This is the area that we struggled with for a couple of days. The single prints from last Thursday on that drop held a couple of days ago. I think it was Monday or Tuesday. Overnight, we broke down, and then we've pushed through them. Yesterday, we sold off. We sold to 31.95, right on top of that stock zone. Beautifully played there. And And what we've done is we have built a distribution up here, so you can see these big orange profiles with some fat high volume nodes there. We've moved down into this lower distribution, which has a lot of weight to it. And we have migrated yesterday all the way across the range. So we had some really good range yesterday, and we had a very healthy test of the extreme of the range. Remember, 3190 still very, very, very important down here. We moved to 3195 and we've crossed to the other side and we're holding up here. As long as we do not push through this 31, 32, 39, 32, 41 area, this becomes a very important area. As long as we don't push through here, then we are likely to continue to migrate higher and get through to the next Globex high, which is 84.50, and the next target up is likely to be 32.90 in this structure. So that's where we stand. That's the overall view of what's going on in the market. So I want to show you briefly. I use both volume and market profile. I started out with market profile and I discovered volume profile. Here's the market profile version of it. So you could see that this is RTH only, by the way. You could see that there's a range here, and then there's a range here. Okay, so the bottom range is 3190 through 3228.29, right? This area, remember that, 3228.29, and then the upper range is essentially 3245, which is the low of the overnight session currently, 3245, all the way to that double top high at 71.75, which is where we are now. Okay, so we've migrated from the lower distribution to the upper distribution. We hang it out here, and the question is, do we drop through the 45 and come back into and below the 28, 29 area, or do we hold on? And the only way to get that answer is to be patient and let the market come to that area and tell us what it wants to do. Okay, so a quick view of the order flow. There's quite a bit of activity. We did have some pretty decent extreme tests overnight. And so from the beginning of the session here, which is 5 o'clock Chicago time, I'm in Chicago for those who didn't know, from 5 o'clock Chicago time on the reopen, the market has been holding a steady kind of downtrend until it made this low. It made this low against a pretty good bid down there, which has been canceled. A pretty good bid, and has now been forming higher lows. What does this formation look like? I don't trade chart patterns, but I do. The price action is important to me. And so what do we have? We have a market that is heading into the open and is in an apex at an apex point of a triangle compression. And that compression again, bring you back here for a second. That compression again mimics the profile being imbalanced. So this shape right here. So what is this? I'm going to give you a moment to tell me, what is this telling us? What is this likely to tell us? Or what is likely to happen from here when we have all this balance and we have this triangle kind of forming and we are at the apex of the triangle, right into the open? What does that tell us? I'll give you a moment to figure it out. In the meantime, I'm going to switch to what's planned for today. Tell me what you think of that, or what would you expect of that as we sit here. Okay, so here's what's expected for today. Let's shift over. Now remember the big picture. We still have this big gap zone from 224. From February 24th, we have this big gap zone in play. And underneath us, we have a high volume node here. We have a high volume node right here. 3217 now is the MC point of control. And I outlined those other areas. It's really, really important, guys, to understand the map of prices. This is the edge, is understanding the map of prices. And then so when the market breaks, you're not sitting here managing a trade on the dome. You're just looking for those bigger prices. You want to let those winners run. Otherwise, you're doing a lot of work so that you can scalp for 30 seconds and catch 2 points and feel like something big was accomplished. Great, you got a winner, but it's not a good winner in my opinion. Not trying to be mean, but I want you to do better. Doing all this work so that you can scalp for 30 seconds when you're doing all this homework and study and all that stuff is not the best return for your risk or your time. So you want to have a pretty clear map of what to expect and what those big prices are. That's what these stock zones are for. They help map things out and tell me what areas I'm likely to see obstacles on the way as the market trades. What are we expecting for today? Wow, this trader bite's way too long. They're getting way too long. What are we looking for today? I'm looking for an open auction. We are again compressed, looking for an open auction, but I'm looking for a break higher or lower. It is very hard to tell here. We do have pretty solid areas beneath us to test. You could see how it treated these stock zones. Again, the 29, the 39 stock zone. It had an LVN in it yesterday. Had a double test here yesterday. These are beautiful. The stock zones have been just beautifully respected. And so if it explodes upwards, and that's I don't know which, but more likely upwards, more likely a flag that is going to break to the upside. Consolidation is likely to break to the upside. We're likely to test at 71.75 double top, the overnight 73.75 pull back, and then start to push towards 83 into the session. And then we're going to wrap it up by balancing portfolios, hedging margins and risk into the weekend on the close. That's the secondary scenario. The flow of trade. Look at this tape. Look at the tape here, guys. The tape has size on the buy side. You can see the blue is our prints on the offer. You can see all the size is on the buy side into the apex. So the easier flow is likely to be to the buy side. Likely not. I'm not guaranteeing anything. I don't know what's going to happen. The secondary is we trade in an open auction, push up, and then unable, and we break down into this 51.45, take out the overnight low, and make our way into that 39 for a bounce. That's the secondary scenario. We are in a gap, so the market is expected to be responsive early because the overnight inventory is long. Again, those are the two key scenarios. It's not my job to predict the market. It's not my job to tell the market what to do. It's my job to have a plan for whatever it does. And now we just need to wait and see what it does. Sorry about this being so long. 4 minutes to the open. Good luck, and I'll catch you on Monday morning. And guys, if you have not reached out to us at Edge Clear, I'd really like support for this brokerage. I fully own it. I have 3 amazing brokers, and it's been the support has been great, but we're doing some big things for traders, and we'd appreciate your support. Since you need to clear your trades through someone, I'd love for it to be me. Good luck, and we'll catch you later. Take care.